Hello students, welcome to the lecture series on corporate accounting. Today we shall take up part 6 of accounting for banking company. We will take up a practical question to understand how vertical form of balance sheet is prepared for banking companies. So with first of all we will take up the first portion, that is P&L account. So today we will take up P&L schedules and prepare the P&L account as per the schedules given under the guideline for preparation and presentation of balance sheet. So from schedule number 13 to 16 we will touch, because from schedule number 13 to 16 P&L is being prepared. So let us understand this question and try to solve it with the appropriate schedules. There is a bank whose details are being given in the form of information. It says that interest and discount received is 37 lakh 5,738. So as and when we are reading the information, we will identify the schedules with it only. So I am again reading it. Interest and discount received 37 lakh 5,738. So it is part of schedule 13. Interest paid on deposits, it is paid interest, interest expended 20 lakh 37,452, schedule 15. Salaries and allowances, they are operating expenses for 2 lakh rupees. So under operating expenses it will fall under schedule 16. Directors fees and allowances 30,000, it is again a operating expenses, schedule 16 will be touched upon. Rents and taxes paid 90,000, operating expenses it is. So under schedule 16's operating expenses it will fall. Postage, telephone and telegram 60,286, it is again a operating expense, hence it will also fall under schedule 16. Commission, exchange and brokerage 1,90,000, this line of item is a income. So it will fall under schedule 14 of income. Then profit on sale of investment, it is again other income of 2 lakh. Rent received, so it is also a income, rent received is 65,000, schedule number 14. Depreciation 30,000, it is a operating expense. Stationery 40,000, again a operating expense, so it is also the item for schedule 16. Preliminary expenses 25,000, audit fees 15,000, again a operating expenses. Now when preliminary expenses comes, we should keep in mind that if a company is going to pay dividend, we need to write off the preliminary expenses in full. After that only dividend is payable as given under the various provisions of Banking Regulation Act. There are certain additional information in the form of adjustment in this question. The first one is a debtor for 10 lakh has been declared insolvent and 50% recovery is expected. So we are going to make provision for 50% of 10 lakh, that is 5 lakh. So under the head provisions and contingencies, provision of 5 lakh will be prepared for provision for bad debts. Auditor requires a provision of 1,50,000 against other loans. So provision for other loans would be 1,50,000. It will again fall under the provisions and contingency schedule or note. The rebate on bills discounted as on 31st March 2017 was 12,000 and it is supposed to be 16,000 as on 31st March 2018. So opening rebate on bills discounting is 12,000, which we will add in the interest and discount, and 16,000 we will subtract. So we will make a notes to accounts for our schedule 13 and these adjustments will be made accordingly. And we can directly make the adjustments under the inner columns in schedule 13, but it is preferred that a short note or working note is being prepared and the final figure is being inserted in the schedule 13. Directors have decided to declare 10% dividend. So first of all we need to ascertain what is capital, it is also given. Provide 5,50,000 for income tax. This provision will again fall under provisions and contingency schedule. Paid up capital of the company is divided into 1 lakh equity shares of 10 each. So, we are having 10 lakh rupees as our share capital, out of which 10% is declared as dividend. So, 1 lakh is our dividend. When dividend is declared, preliminary expenses have to be written off full under operating expense schedule. So, let us move ahead and do the solution for the given question. First of all, we will prepare the working note for calculation of interest and discount to be shown under schedule 13. So, interest and discount received as provided in the information is 37 lakh 5,738, and in the additional information we are having opening balance and closing balance of rebate on bills discounted. So, add rebate on bill discounted on 31st March 2017 for 12,000 and less rebate on bills discounted on 31st March 2018, that is 16,000, because it is a provision on unearned discount. So, provision of current year will be reduced and previous year is reversed. So, previous years would be added and current years would be reduced from our incomes, because it is a part of unearned discount. So, the aggregate value is coming, which is to be shown under schedule 13 for the income of interest and discount is 37 lakh 1,738. Another working note is calculation of provisions and contingencies. Provision for insolvent customer 5 lakh. In the additional information point 1, we were said that customer having 10 lakh rupees has become insolvent and only 15% is supposed to be recovered from its states. So, we are going to prepare the provision for insolvent customer 50% of 10 lakh, that is 5 lakh. Provision for other loans which is being suggested by auditor, we need to prepare it, that is 1,50,000. Provision for income tax was given in the form of additional information for 5,50,000. Aggregating 5 lakh, 1,50,000 and 5,50,000, we are having provisions and contingencies total to be 12 lakh. It will be reflected in P&L. There is no schedule assigned to provisions and contingencies, but it will be reflected under P&L account after the schedules. So, here is a P&L account of the bank, and we will use this format where first we will show particulars where income and expenditure and relevant schedules will be given. In second column schedules will be there. In third column year ended details as on 31st March 2018 and previous years figures will be given. Since we are not having previous year's figures, we will not insert anything in fourth column. So, under column 1 incomes are given. Under income there are two schedules, interest on schedule number 13 and other incomes schedule number 14. Under expenditure we are having interest expended 15 schedule and operating expenses schedule number 16, and then we are having provisions and contingencies which will be reflected at end to a certain profit. So, under first schedule income there is interest earned schedule 13. We have calculated in our working note number 1 this figure of 37 lakh 1,738 and we will put it as such. Now, other income we have to prepare schedule 14. Under schedule 14 we have already ascertained what will fall under schedule 14, that is other income. Commission, exchange and brokerage income of 1,90,000, profit on sale of investment 2 lakh, then profit on revaluation of investment is not given to us, profit on exchange and other transactions and other information not there, but miscellaneous income there is rent received of 65,000, we will put this under other incomes. So, our other incomes will aggregate and we will write the details of 4,55,000 against schedule 14. So, our incomes total is coming as adding 37 lakh 1,738 and 4 lakh 55,000 to be 41 lakh 56,738. Now, coming to the expenditures, we have to prepare two schedules, interest expended and operating expenses. So, let us see schedule number 15 first. Schedule number 15 will have interest on deposits, that is 20 lakh 37,452. It is given straight in the form of information in our question, and from this schedule we will insert it against schedule number 15 that is 20,37,452. Now we are going to prepare operating expenses schedule, that is schedule number 16. Under schedule number 16, other operating expense details will be given. First will be payment to and provision for employees, it is given as 2 lakhs, rents, taxes and lighting 90,000, printing and stationery 40,000, depreciation on bank's property 30,000, directors fees, allowances and other expenses 30,000, auditors fees and expenses including branch auditor 15,000. There are no law charges, so we will keep it as such. Postage, telegram and telephone 60,000 to 35, and the other expenses of 25,000 is reflecting preliminary expenses. The company is declaring the dividend of 10% on 10 lakh of the share capital. So, it is a provision that we need to write off all the intangible assets and expenses which are reflected as preliminary expenses, setup expenses before providing the dividend. So, 25,000 will be written off fully in the schedule of operating expenses. So, having all the operating expenses in this schedule, we will aggregate it and then we will reflect the total amount against the operating expenses schedule under our P&L account, and its total is coming as 4,90,286. So, when we go to the P&L account, we are showing it here under operating expenses 4,90,286. So, now we can see that we have reflected all the information for income and expenditure. Income aggregating is 41,56,738 and expenditure total is coming for 20,37,452 schedule 15 and operating expenses 4,90,286. So, schedules we have filled up. Now, we come to provisions and contingency. We have already prepared a working note for provisions and contingency and prepared the provisions which were required for bad debts, taxation and other loans amounting to 12 lakh. We will insert that figure of 12 lakh in this schedule of P&L after schedule 13 to 16, and there will be no schedule assigned to provisions and contingencies. It will simply be reflected in the amount column of the current year. Then we will ascertain profit. The net profit for the year is coming as a difference between income minus expenses, that is 13 schedule plus 14 schedule minus the total of 15 and 16 schedule minus provisions and contingency. So, it is coming as 4,29,000. Now, statutory reserve is a compulsory reserve which we need to transfer. So, we will make appropriations out of P&L, that is profits so earned, we will appropriate it and we will transfer it to the statutory reserve as per the specific percentage, that is 1,07,250. Then we will transfer the profit to the proposed dividend account of 1 lakh. So, we will be left with the balancing figure to be carried out to the P&L account to the extent of 2,21,750. Now, this figure will be reflected under reserves when we prepare the balance sheet. The schedules of balance sheet which are starting from 1 to 12 will be covered in our upcoming lecture, and that will be the concluding lecture. Then we will ascertain the notes to accounts and remaining portion and other adjustments like ECGC covers, etc. So, here overview of the P&L account preparation is being discussed. Now, students, we are summing up our discussion of today. Today we have learned to prepare profit and loss account in the vertical format as specified under Banking Regulation Act for the banking companies. We have learned about preparation of schedule 13, that is interest and discounts earned, schedule 14 other incomes, schedule 15 interest expended, schedule 16 operating expenses and provisions and contingencies, then ascertainment of profit and loss appropriation by transferring to statutory reserves and other reserves, and finally transferring the balance to the balance sheet to be reflected under reserves and surplus. With this, we are ending up our session of today. Hopefully, the presentation and preparation of P&L is clear. Thank you.